Hello everyone, this is Matthew Frailey with BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms like you see here, which by the way, knocked it out of the park today. We had 4 systems coming into today that were short that we sent out to our subscribers the previous week. You can see here, they all closed out for very nice trades. We had a combination of, we had 2 shorts, 2 systems that were short on the SPY ETF. They both took a second entry. These were reversion to mean type systems. And we had 2 on ES. And we actually had a new system take a short today. So if you haven't done so, sign up for a membership at Breakpoint Trades and start receiving trade signals to our mechanical trading systems. We have 23 systems that we run across both SPY and ES, and we send out trade notifications whenever they do a trade. Again, 23 separate systems. Why do we do that? It's because that's part of the risk mitigation, and it gives the most trade opportunities. It's a lot better than just having one system. We have 23 chances for systems to trigger long or short. Anyway, let's get started with today's detailed technical analysis. This is a comprehensive newsletter for Wednesday, January 18th, 2023. So let's go and get started here. So I'm recording today's video or today's newsletter as a YouTube video. As you know, I just did a YouTube video on Monday, the 16th, Martin Luther King Day. So I figured it was time to do another video since some of the things I've been discussing have played out. First off, again, this is a comprehensive technical analysis newsletter on the market for Wednesday, January 18th. Okay, here's the table of contents. Before we get into the general market, we're going to discuss our mechanical trading systems. Very nice trades by the systems. We had 4 systems that were short coming in today, and they all closed out for very nice gains. And after we discuss that, we'll move on to the general market. In my video on Monday, I discussed the rising wedge that we were watching on the S&P 500. Steve discussed it in Tuesday's newsletter last night, and that played out in a big way. We've been showing that rising wedge for the last 2 days. The S&P sold off over 60 points today, while the Dow sold off over 600. We'll look at some indicators, bonds, a few sectors, the dollar, commodities, precious metals, and we'll go over a few trade ideas. Like I said, guys, Steve and I have been commenting about these rising wedge patterns that we were monitoring on the S&P and the triple Qs, and those played out in a big way. Remember, also this week we have options expiration, the 3rd Friday of the month. Let's go ahead and move on and look at these system trades. So the first, let me zoom out here a little bit so you can see on the video. So these are the open trades that we had coming into today. We had 4 systems that were short. It's a little hard to read this because I zoomed out, but we had 2 systems that were short on ES. You can see here how they closed out. First entry, second entry, and this was the high, mid, low short version 2. This is the high, mid, low short version 1. We have 2 versions of that system. So clearly this version here had the better entry. It had 1 entry. It was basically a perfect entry. This one had 2 entries. The first one being a wash, the second being a nice winner. On the side here, you see on SPY, we had 2 systems were short. We had the QE BTS was short, 2 entries, closed out today, and the high, mid, low on SPY. So nice system trades. Again, the trade entries for these systems were sent out to subscribers, and today I sent out notifications letting everyone know they'll be closing out. Again, if any of you took these trades, you easily made more than enough to cover membership for probably several years. So congrats to those who took the trades. Next. Image number 3, this shows you these recent trades. So you can see here at the top is the SPY systems. We had, again, high, mid, low was in the first and second entry. QE BTS, first and second entry. You can see the profits. And again, guys, just as for simplicity, on the website I show $10,000 for each trade. Again, it's a round number of 10. Clearly, if you're trading the systems, you're going to do a dollar amount that fits your style, whether it be 5,000 or 50,000, who knows. But I show that as simplicity. This is the guide. You do you do your own stuff that fits your risk parameters. So nice gains here. For ES systems, we show the trades as MES futures. That's the micro contract. It's a little easier to stomach versus the regular ES contract. And you can see the nice trades here. $730 on both of these trades. And this one here was essentially a flat trade. So nice trades here. Congrats to the systems. Next, moving back to the general market. So here's that 30-minute S&P 500 chart I was showing on Monday. Steve showed it Tuesday, yesterday. Again, this was well spotted. We talked about the S&P coming out of this nice base here, consolidation. It was in there for about 3 weeks or so. It then formed a very obvious rising wedge. You can clearly see the 5 waves. Whenever you have 5 waves and you have MACD divergence, that is a clear sign to be on the lookout for a reversal. So we got that. Got a little break here, a little bounce this morning. Didn't quite make it back to the highs, almost, essentially a little double top, and we sold off strongly today. Again, the S&P sold off about 60 points today. Here I added fibs from the little wave 2 low to the high. If you look at that, we closed right around the 61.8 fib here. Now we have an open gap here. The S&P cash really likes to fill these gaps. So that's around 39.19. We didn't quite fill that. If we get a little weakness tomorrow morning, Thursday, I think we'll fill that. Here's some other fibs drawing from the recent lows, and they come in down at lower prices, as you can see. All right. So we'll see what happens tomorrow, guys. Clearly, the wedge is played out. Now we'll see what format this goes, whether this ends up being some sort of ABC or a coil, or it goes all the way down. For now, I think it has the possibility to form a higher low because of the recent breadth, but we'll see. We'll get back into this in a minute. Let's go ahead and move on back to the general market analysis. Image number 5 shows you the index sector table, what transpired today. So you can see the major indexes up here. Again, down anywhere from 1.8 to 1.5%. S&P was down 1.56%. As far as the major market sectors, broad-based sell-off, every single sector. We follow 21 of them, from transports to utilities. We're all down, and everything's down for the week. Then, of course, the indexes are down for the week, too. Currencies, US dollar was essentially flat today, up for the week a little bit. Crypto pulling back with the market. It tends to be correlated with the market. Commodities got smulched. You can see only a couple green here. Copper slightly up. Coffee up, but everything else down. And precious metals, which has been getting extended, finally pulled back, especially the stocks. As far as bonds, high yield corporate moved up, or TLT 20-year bond up today. 10-year treasury yield continues to sell off. Next, image number 6. This shows you the economic and news calendar. Today we had that PPI, core PPI, retail sales. Tomorrow we have initial jobless claims, housing starts in the morning, natural gas inventories, existing home sales on Friday, and of course, remember, options expiration. Remember, guys, we are starting earnings season, especially in the next couple weeks. So we'll see if the market tries to hold up into that or not. Next, let's move back to the index analysis. So this chart here shows you the 5 major indexes, the Dow at the top, S&P, Nasdaq, Russell 2000 at the bottom. Again, strong pullback today, especially for the Dow stocks. The older economy stocks taking a little more on the chin here lately. They've held up the best over the last year plus, and they're getting hit a little bit stronger. Next, moving back to our proxy, the S&P 500. So here's a daily view of the S&P. Again, you can see the start of the bear market back there in early January 2022. And you can draw a well-defined downtrend line that we've tested 3, 4, 5, 6 times. And you can see we were right on that downtrend line yesterday. Yes, we had cleared the 200-day moving average, but as I always tell folks, when you clear the 200-day moving average, you need to hold it, okay? Just like back here, it cleared it and then it lost it within a couple days. Back here it stalled at the 200-day moving average. So we regained the 200-day moving average and then lost it again. We reversed right at the 200-day moving average, closing right near the 50-day moving average in red. So now we'll see if we could form a higher low. If we can form a higher low, my guess would be somewhere around the 3,900 area here, and then we'll see if we can build another sort of rally. Ultimately, for the S&P to get to these upper levels, needs to take out this downtrend line, obviously. So that's important. The more bearish view would have this as a wave 2, and you're going to go down in wave 3. But again, for that, you need to take out these lows. Next, chart number 9, here's a zoomed in daily view. Okay, you can see how we regained that 200-day moving average slightly. Had a little spinning top doji yesterday, which is a little warning. In fact, you could have triggered short right off the low of that doji. Big move down today, right to the 50-day moving average. Next, chart number 10, here's the daily KISS trend system. Again, this did not go back long, so reversing here. Remember, it stopped out at the smart trailing stop back here at 39.13. These are trend following systems designed mostly for bull markets. And, since the S&P and market has been a bear market, they went long a few times last year, but usually for about a month or two, and then they get out. Next, chart number 11. This shows you 4 time frames of some of our custom indicators. So again, you can see the S&P up here reversed near that ATR a little bit. What really stood out yesterday, guys, on the 195-minute, and Steve discussed this last night, was the Demark 13 on the half day. And on the Qs, you had it on the 60-minute or the 130-minute, which I'll show in a minute. But so nice pullback from there. This ATR is a big support area. Again, just below the 3,900 area. Yeah, we closed right near the ATR here. Next, moving back to the standard chart, chart number 12, here's the 2-hour view. Steve talked about the supply zone, and you can see we didn't even get it to it. We stalled right there and then sold down. Next, chart number 13, here's another 2-hour view, updating the one I showed on Monday. So on Monday, I had this, the symmetry mark here in blue. So what I'm talking about is the move down from that 4,100 area to the 3,764. This would give a target to the downside if prices keeps going down. Another view that I'm open to, or the other view that I still favor at the moment, is some sort of ABC pullback, higher or low here that you see in green. So initially we had a wave A down. Maybe we get a little wave B bounce soon, and then a C, and then we go up. All right. So we'll see which option plays out. Again, I lean toward this green one, but we'll see which one plays out. Next. Chart number 14, 60-minute view. Again, you can see the same wedge. We have this open gap, like I said, that's a magnet. So if we get a little weakness tomorrow morning, that could be filled, and then maybe we'll see if we can get a little reversal or not. Moving average ribbon on this time frame is still bullishly stacked. It's pinching. That's where you start to look for some sort of reversal, if it's going to happen. Next. Chart number 15, here's that 30-minute chart I just discussed. Like I said, we had that, that wedge was beautiful, played out. We had this little open gap here in the short term. Next, chart number 16, 10-minute view, little wedge. You can see the wedge a little clearer here. Again, really strong sell-off today. You guys had opportunity to enter this short today in the morning. Finally, chart number 17, here's a 5-minute view of the S&P. Again, you can see the big decline today, but if you look at this, guys, we had a little bounce late day from around just after 1 p.m. to just around 2 p.m., but it stalled right at intraday symmetry, the dotted line. So what I mean is the intraday, when the market opened, here was the largest intraday bounce. I simply clone that, add it to here, and that's exactly where it stalled. Had price rallied larger than this, and you had a bullish break in symmetry, then you'd have set the stage for a higher low. But instead, that doomed this to be a fourth wave, and we sold off. Next, chart number 18, here's the triple Qs daily. Again, didn't quite get up to the downtrend line there. The downtrend line from the January or December 2021 highs. And nice pullback. Again, it's right on the 50-day moving average here, right above the 9 EMA. Next, chart number 19, here's a zoomed in daily view. Again, got a little support down here around the 9 EMA. We'll see if we can bounce off of that or not. Next, chart number 20, here's the triple Qs KISS system daily. Now this did go long last week, or yesterday, guys. But as we stated, we were right at resistance. We had a rising wedge. Better to wait for some sort of pullback. Also, take a look at the old trusty A here. That's amateur buying. Those are very good about showing up near highs, like you see back here. Very reliable and nice pullback. Now we'll see. Anyway, the system did go long. There's a stop. Initial stop here, smart trailing stop way down at 261. Like I said, entering yesterday was not objective, but after some sort of ABC pullback, then you have a more objective entry, in my opinion. Next, chart number 22, here's the 4 time frame. So on the daily, again, you had that perfect A amateur buying there, which marked that high yesterday. You had a Demark 13 on the 195 half day chart, and on the 130 minute, you had a 13 Demark. So you had a lot of things lining up with the Demarks, the A's, the fact that we had rising wedges. Next, chart number 22, 2-hour review. We've been getting the Qs had a rising wedge, just like the S&P, right into the supply zone. Was rejected from there. Next, chart number 23, 60-minute view. You can see that rising wedge playing out nicely. Here, added fibs. You can see a 38% fib right around 275 now. Next. Moving on to a few indicators. So chart number 24, here's the VIX. Guys, this is the other thing. This gave a big warning signal yesterday. The VIX closed back inside its Bollinger Bands. It had closed outside the lower Bollinger Bands 2 consecutive days. Whenever it's outside the bands and closes back inside, that usually gives a very reliable signal. And that was a reliable sell signal yesterday. Next. Chart number 25, here's a 15-minute chart. Steve showed this last night. You know, it still had a pretty bullish look here. Pulled back to the 50% fib and obviously then played out today. Next. Chart number 26, high yield corporate. This held up actually very well with the general market down. This still actually closed up even though it was a black candle. That's relative strength. Next. Chart number 27, there's a 60-minute chart. There's a little negative divergence developing, but otherwise it held up well considering the market. Usually moves with the market. Next. Chart number 28, TLT 20-year bonds closing right at the 200-day moving average. Well, now we'll see if this can get over this. Wouldn't be surprised if it does. Next. Moving on, look at a few individual sectors. Like I said, I'm not going to look at all the sectors. We'll just look at a few of the key ones we've been discussing. So let's take a look at those. Chart number 30, biotech. Again, biotech broke out of this coil pattern last week. Like I said, nice pullback today as expected with the market. I am looking for this potentially to find support at the 9 EMA or the trend line. Okay, if it gets down into there and I see a reversal, I may take a position, but we'll see. Next. Chart number 31, XLB materials. Steve highlighted this one last night as overextended. Let's take a look at the 60-minute. So chart number 32, here's that 60-minute time frame. You had a little level here. It looked vulnerable, little like a shelf support, and that was lost. Next. Chart number 33, XLE Energy was up today, but stalled right at this trend line. This little expanding pattern. The big question here is, was this a wave A move down to 8180? Was this a big wave B? And this is going to eventually get a C wave down to 200-day moving average or a little below. We'll see. Next. Chart number 34, here's the 2-hour view. Just like on those indexes, you had a little rising wedge here playing out. Next. Moving on to commodities, chart number 35, DBC, pulling back again. As I showed you on the weekend newsletter, long term, the monthly, weekly charts look great, but short term, pulling back. Next, chart 36, crude oil pulling back a little bit after a nice move. Next, chart 37, natural gas. Possible little wedge setting up here. This is getting quite oversold. Going to keep an eye on this for some sort of bounce. Remember, we have natural gas inventories tomorrow. UNG and Boyle are two of the popular ETFs. Next, chart 38, copper was up pretty strongly today outside its Bollinger Bands, but pulled way back. Again, get quite extended here, guys, after breaking out of this pattern, so not surprising if we see a consolidation. Next, chart 39, SCCO. This was the star. We picked this as a long idea a couple weeks ago out of this coil. This is, again, a copper stock. It went right with the commodity that had a similar pattern. Just power rocketed out of here. I said on Monday that you had a warning here with 8 consecutive closes above its Bollinger Band. So now you can see you're getting some consolidation. It made a brief new high here, but again, with some divergence here, you have it on the CCI, a little bit on the RSI indicators. This may be due at least for some sort of reversion to mean pullback down to its 9 EMA. Next, chart 40, CNX. One we've been showing, it's an aluminum stock. We do like how this is potentially coming out of this big old basing pattern. When stocks come out of basing patterns, they can have extended runs, as we've seen. It was up nicely today, but way off those highs. Next, chart 41, DBA, another weakness here. You got a little shelf support down here. Next, chart 42, Bitcoin. Again, as you know, this rally last week with the market, so pulling back a little bit today. As I discussed on Monday, I discussed how crazily overbought these RSI indicators were, so not surprising. Next, chart 43, here's a 2-hour review. Steve pointed out a rising wedge last night, which playing out. Next, looking at the individual names, the stocks. Hope you guys took profits on these yesterday, or at least, last couple days. Big sell-off here, down 7.5%. Again, they had quite an extended move. This is a long idea of ours back here in early January, and at $10. So hopefully you took some profits. That black candle yesterday was a warning. Next, chart 45, Riot, same deal. Again, had one hell of a rally out of this wedge. Huge percentage gainer, almost 100% move. Clearly black candle. Yesterday was a day to take some profits. Next, chart 46, US dollar ETF UUP. Again, essentially closed flat. If the dollar starts to rally here, we'll see if that affects commodities or not. Next, chart 47, gold, pulling back a little bit. Again, gold has had a beautiful run breakout from this November move. We have a series of higher lows in place. No MACD divergence. It may pull back here, it may consolidate, but to me, it's in an uptrend. Okay, your first support's in the 9 EMA, then your 20-day if the 9 EMA is lost. Next, chart 48. Here's another chart of gold. Now this one has the GDX GLD ratio on it. It's best when the stock's a lead, so keep an eye on this ratio here. It has pulled back a couple days. Next, chart 49, silver. Silver's had a nice move out of this rounded bottom pattern. Still have this little pattern here we're watching if we break down here or not. Again, 50-day moving average would be your first clear support. Next, chart 50, GDX. Again, GDX is an uptrend just like gold, but like I said, it's getting extended. Yesterday was a little warning. Today we lost the 9 EMA. Maybe we have a date now with the 20-day. These are some stop ideas, trailing stops. You want to keep a stop that wide. Next, chart 51, dust. Steve put out dust last night as a short idea for GDX. You can see it's playing out a little bit, this wedge. All right, guys, now let's follow up with some individual stocks. So chart 52, Apple, Crapple. Always got to watch this one since it's the largest component. You can see it got near its 50-day moving average today, reversed. Next, chart 53, Tesla. So Tesla, we talked about this little fifth wave low a couple weeks ago, but we stated that we viewed the rally, at least for now, as a wave four, larger wave four. It's possible we may have put in that wave four. We'll see. If so, I mean, Tesla could come all the way back and make a new low. Again, we'll see how it acts going forward. Next, Jarbor 54, PCT, one of the recent long ideas. Again, nice move. Profit taken today. Next, Jarbor 55, McDonald's. So this is a long idea on Monday. It gave a great trade on Tuesday, and if you did not take profits and set a stop, ouch. That's why you got to be disciplined with trading, guys. Again, if you bought this come Tuesday morning, you had a nice trade. You know, if you went home and you didn't set a stop, you didn't take some profits, you know, you could have a big loss here. That's why you got to do it, guys, because things like this can happen. Next. Jarbor 56, FRTX, a little one we've been watching. Tried to trigger, but reversed, not surprising. Again, remember, guys, it's a $2 stock. So, next. Jarbor 57, GNK, recent long idea, little reversal today. Next. Jarbor 58, Sophie. This has been a nice long as well from ours. Next. Jarbor 59, TK, recent long idea. Again, just like that McDonald's, you had a nice trade going on here, and if you didn't set a stop, you gave it all back. Next. Jarbor 60, FTCI, one we've been watching, monitoring. This had a nice relative strength today, good volume, closing right near this 3 resistance area, one to watch tomorrow. Next. Jarbor 61, Kayla. I'm watching this one. It had a huge volume run up here to the upper 50s, pulled all the way back here to 17 on light volume. So I'm watching to see here. I mean, you could even take a long here with a tight stop below the support. Next, Jarbor 52, Kayla on the daily. Again, you can see, like I said, I had a huge run up here on monster volume. Obviously, some sort of news. I don't know anything about it, but it's pharmaceuticals. Obviously, one of their drugs got to be. So huge move up, light volume pullback. You know, when you see that, usually you'll get another pop. Again, guys, as far as other trade ideas, I didn't run any scans today. So I may do that later tonight, but figure with the volatility, no reason to throw a bunch of ideas out there. But these are 2 I'm watching. Anyway, guys, we'll see what happens tomorrow. By the way, quick check on futures. ES futures are up. They're up a few points. Okay. Talk to you later. Everyone have a good night.